So there have been a lot of news reports saying that Adani is acquiring Paytm, and this has certainly led to the Paytm stock in the market going an upper circuit for the last couple of days. Along with that, Adani Enterprises have also announced that they're going to raise something like $3.5 billion to fund their expansion. If these rumors are true, then what does it mean for Paytm? One, what does it mean for Adani too, and what impact will it have on the fintech sector? The challenge that Paytm was facing till now was of corporate governance and managing growth, and this was largely because it is an entrepreneur-led company, and its systems were found inadequate to meet a regulatory requirement. Hence, its banking license was scrapped by the regulator RBI. The acquisition by any large entity or corporate group like Adani will certainly help one in making an entrepreneur-led company more system-led in that sense. This is good for the current public investors of Paytm, because this would mean that these systems will help the Paytm grow better and in a more organized and structured manner. A group like Adani, which has largely been in infrastructure and infrastructure related services, ports, roads, and lately energy and other areas, is getting into financial services, and it's not getting into financial services by the traditional route of starting an NBFC or acquiring an NBFC. It is entering the financial sector by acquiring a FinTech company. So there is a larger macro trend here, which, as you know, that as developed economies increase wealth, financialization of assets happen. Now, in the case of India, what is happening is not only financialization of asset is happening, but parallelly digitization of financial sector is happening. So in a sense, the Adani Group is trying to capture two macro trends by a singular acquisition, which is financialization of assets and digitization of financial sector, which is the fintech, obviously. So it is a plus for a large corporate group like Adani too, that it gives them entry into financial sector, and it gives them entry into both the the merchant side of the business and the retail side of the business. Paytm is still a very well penetrated payment company, and it has been diversifying, particularly over the last 2 years, and especially more so after the RBI restrictions into wealth management tools and wealth management services. There is competition in the sector. It's not like as if there is no competition. There are big players, particularly in wealth management. Players like Kotak, Edelweiss, Nuvama, and others. There are also fair degree of almost every vertical within the financial sector has been digitized, whether it is selling insurance, selling mutual funds, everything from distribution to lending to borrowing to even credit cards has been digitized. So there are players in almost every segment, both fintech players and traditional players like Bajaj Finserv and others, who've been digitizing at a very rapid pace. So, but because the economy is moving at such a fast pace, that there is enough so-called headroom for new players and also for large groups to enter this business. This is a regulated industry. It's not as if it is an unregulated industry, but it is a regulated growth industry. And there are ways to basically, data plays an enormous role in this space, and data also has been regularized, organized uh, by through account aggregators in this space. India is far ahead in giving data rights for financial information than any other country in the world. So the stage is set for for any large player which can either offer new services or offer existing services at a cheaper, better, faster rate. So the sector is certainly going to see a lot of competition going ahead. If it is not Adani, the Tata also has a fair degree of plans to, uh, they have an entity called Tata Capital, which is fairly active in this space. So this space is set to see a lot of action both on the FinTech side and on the wealth management side. Companies typically deny such happenings till such time everything is signed and sealed. When they are in talks, when there is a conversation uh, going on, they cannot admit to the conversation, nor can they comment on the conversation. So, if you would look at this thing, they would say that there is nothing material to report at this stage. So the conversation might not have reached a stage where they have a material offer or they have reached a negotiation stage where there is a material offer on the table, or there is a material offer that Paytm can take to the board. So this is a standard operating procedure for corporate when it comes to any kind of acquisitions, even when they are friendly acquisitions.